Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Tuesday, August the 18th, the year's 2020. Let's talk trading. Pips, lots, and dollars. A lot of you, or at least some of you, seem to have some problems understanding the difference, and I think it's working on your psychology. And as you know, these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. And I have Walmall on the line to talk about pips, lots, and dollars. How you doing,
Hey, how
Walter?
you doing, guys? I'm doing great. Hopefully, everybody out there in trading land is doing well. It's been a fun day on the market today, and I made my core, so that's what matters.
Yeah, so, talking about your core, you're talking about dollars, or are you talking about pips?
I am talking about dollars because my goal is to go and make a certain amount of money every day. That's my goal. Now, some days I make it, some days I don't. But that's my goal, and that's what I try to do. So that's where I'm trying to get to. That's my core.
Yeah. Now,
okay, go ahead.
I was just going to say, you talk about your core, and you talked about your money management, but you see, I think where the confusion comes in is, I put up the risk management chart. First, I talk about risk, and risk is dollars. Or like I say, you might lose a certain percent or be willing to lose a certain percent, but we're still talking about money. So if you have $1,000 account and you're willing to lose 5% per trade, you're talking about $50. So this is the dollars. Now position size, that's in lots, and your stop loss is in pips. So you see, when you do these calculations, you've got dollars, you've got pips, and you've got lots. And that's what you have to understand, that they're not all the same. But so when you're talking about lots, that's your position size. And when I talk about, equating trading to weightlifting, and that your method, that's your form. Okay? And then the weights, that's your lots. And so if your form is right, it doesn't matter. You should be able to trade a certain number of lots. But the problem is then lots equates to money. And that's where you have a problem with the brain management, okay? Because if you start making decisions based on the money, then that's when you're going to start to drift away from your trading plan. So what am I talking about? If you're up 1 pip and you're trading a dime a lot, right? It's not going to matter to you because you're going to be up. I'm sorry, you're trading a dime a pip. You're not going to be up that much in dollars. But the thing is, a pip is still a pip, right? But not all pips are created equally, because if you're trading more lots, then you've got more money more skin in the game, right? So what will happen is, if you're trading at, say, $10 a pip and you're up 5 pips, that's $50. But if you're trading a dime a pip, that's 50 cents. Well, you go, I'm going to take the $50, but I'm not taking the 50 cents. But is that really your plan? How about you,
Well, I agree. I would agree exactly with what you're saying. In fact, you asked me a very interesting question yesterday, or maybe it was Friday, I don't recall. But you asked me the question is, when I was in a trade, and you said to me, would you still be in this trade if you were trading your full position? Because at that point in time, I had made my core already, and I wasn't trading my full position anymore. And you asked me that question. And I answered you, and I said, no, I wouldn't. I'd be out of here. And you said, then why are you still in the trade? And you're exactly right. Why am I still in the trade? Why am I trading differently based on how many lots I've got on the line? And, and I think there are certain times when it does make sense to go and do that, but most of the time it doesn't. It doesn't make sense. You're supposed to be a machine. You're supposed to, doing this whole idea of wash, rinse, and repeat. Well, that even means when you're changing your lot size. And one of the things I just want to go in, and I know I've shared this with you, TRO, in the past. I don't know if I've ever shared it on a video, but one of the things what I did in the very beginning that helped me out tremendously with that effort was, especially when I was moving up on my lot size, and, you play a psychological game there, because all of a sudden, if you move from, let's say, trading one lot to two lots, and you're down 10 pips, well, here's the reality, that's 10 times, 10 times 10 or $100. Well, now it's 10 times 20. Now you're down $200, and that can go and play some mind games with you. So what I like to do is, you got the terminal on the bottom of the screen, and I like to have that on there because it's showing me how many pips I'm up or down at that moment in time. But I like to squeeze that a little bit so I don't see the actual dollars. The only thing I'm seeing going up and down is the actual pips. And that keeps that dollar number out of my head. It doesn't influence me. I have a trading plan. My trading plan says to do X, Y, and Z. It doesn't say to do X, Y, and Z, and I don't know, A, if this condition and that condition are met or not met. I don't have that in my trading plan, and so it always comes back to your trading plan.
Yeah. And I just pulled up the chart, and I just see that we had an explosion up to 32.30. And Walmall and I, we weren't talking on the phone. Then I called him, and he says that he said, I'm down in a trade. I go, did you go short at 90? He goes, yeah. I go, me too. And the thing is, I had my hard stop. I took a 10-pick stop, and what did you do?
Well, my trading plan says in this particular case, what I'm supposed to do is, if it goes against me, I'm supposed to go and take a 7-pip loss. Well, foolish me, what I did was I stayed in until I got to my hard stop at 10. So I took a 10-pip loss on that as well. Okay? But what I also did was, because of it broke the double O there, my trading plan says if it breaks a double O, I don't even have to wait for a second hit. I go in long. So immediately what I did was I did a reverse. And what I mean by that is I immediately closed the trade, immediately opened the trade and went long there. And I ran that thing up. And what happened was that it went up to 15 pips, okay? And then it came back against me, and I wound up getting out with about 13 pips, And so I wound up, between the loss of the 10 and the gain of the 13, I wound up actually, for this hour, picking up 3 pips. Now, looking at this now, right now, live on this chart, okay, if I had stayed in that trade, and this is that regret of missing out thing, or regret of getting out, okay, if I had, if I look at that chart, right now, I potentially could have been up 35 pips. Okay, so I missed out on 24 pips of move. But I said this to a TRL before we got on this video. I said to him, you know what? I'm more upset with the fact that I gave those 3 pips up than I am with missing out on that 20-something pip for the move up. I'm going to miss out on things like that. That doesn't bother me. What bothers me is I broke my plan. I should have been out at 7. I should have been out at 7, and I didn't do it. I didn't follow my plan, and it cost me 3 pips. That's real money that was in my pocket or got taken out of my pocket. Whereas, and I think the way I rationalize this, what works for me anyway is, I missed out on that 20 pips, but those 20 pips were never, ever in my bank account. They never were there. Now, sure, if I would have stayed in the trade, they would have been, but they were never there. Those 3 pips that I lost, they were in my bank account, and now they're gone, and I can't get them back until I get to the next trade and make them up that way.
Yeah, and that's you know, and I asked you, why did you? I was wondering if I affected you because I said I had a hard stop and I was just like, you know what, I'm just gonna let it see what it does.
And I don't know why I did it. It's probably that hope thing again. Because if you look, I don't know what chart you have up on your screen.
I just have the 1 hour chart.
Okay, if you switch over to the 5 minute chart, you look to the left, and you see all those reversals off of the 3200. So I was thinking in my mind, you know what? There's a good chance it's going to go up there and reverse again. So that's what. But here's the problem. I was thinking. I wasn't trading my plan. I was thinking. It was going to get up there. It was going to get up right below my hard stop, and it was going to turn around and come back for me. Well, guess what? Hope ain't worth anything. It doesn't really do you very much good. And I got clobbered because of that. I would have been much better off going just taking my loss. And then the nice thing about it was, getting in on that 3200 was a little bit more of a chore to do it because I had to go and execute my loss first, get out of my short first, and then get into that, and so there was a good chance that I could have even missed that move. So there was a lot more pressure to go and do it. In fact, we were on the phone when I did that, and I was calling it out as I was doing it. I could have very easily screwed that up, and what if that trade just went up 2 or 3 pips? And now I got to get out of that trade because of it just, it was just a shoot up and it was going to turn and return on me. Now I got to do something, a third thing, all in succession very, very quickly. That puts a lot of pressure on you as a trader. Whereas if I just would have gone and gotten out at the 7, I would have had time to think about getting into 3200. And when I say think about, in other words, getting ready, I don't mean actually think about what the process is, more of getting myself ready to go and do it. And then if something would have gone bad against me, I would have been in a better state of mind to go and get out of it.
So what are you going to do next time?
I'll probably make the same mistake again, I'm human, Will I try to go and improve on it? Yeah, absolutely. Isn't that what we are all supposed to do as people, but the reality is I also know that, we make mistakes and we continually make mistakes. What I need to go and do is make sure it doesn't turn into a habit. They say, forming a habit takes 21 times. Breaking a habit takes 42 times to break it. So, it's sort of like, I don't want that habit developed, and if it does, because then I got a much bigger problem to overcome.
Yeah, it's interesting. They have been doing a lot of studies on habits, I guess in the past 10, 20 years. And
yeah, it's habits are very, very difficult. I'll bring in smoking. They say smoking is an addiction and it absolutely is. It's a chemical dependence. But a lot of people, who go through that and try to break that habit, it's actually more difficult the habit. It's not even the addiction. I think I spoke to my dad not too long ago. And it was interesting, some of the things he said to me. He'd smoked when he was a young man, and he smoked until he was 35 years old, something like that. And now he's well over his 80s, and he hasn't smoked in 50 years. And he said to me, it's kind of interesting. Every time I finish dinner, I still want to reach for a cigarette 50 years later. He doesn't, but it's that habit that got built into you that just says, that's what I'm supposed to do after I eat dinner, after I eat a good meal.
yeah.
And the thing is, here's the good thing, though. If we develop good habits in trading, we'll go and do some really good things. And I think that's why I was able to catch that move up, was because I do have some good habits. I made a blunder of a mistake there, but I also have some good habits. And that good habit was, I know what's to the left of me. I saw what's to the left of me. If this breaks that 3,200, I need to be long because that's what my trading plan says to go and do. And I didn't even think about it. And, TRO, I think you can back me up on this. I just called it out. So it's like, there was no thinking involved. It was a bam, 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 just do what I got to do. And I just did it because it was on out of habit.
And you know what? Once again, the fastest 15 minutes in trading. So, fellow traders, Just remember, it's not what you trade, it's how you trade it. So get out there and drain the banks.